Hi, I'm Kurt Shimmers of Traders Nation. Thanks for visiting TradersNation.com today and using our dual broadcast media player. You know, we're always looking for ways to educate investors and traders, and we've done it again. We're now offering bits of ProOnline Trader DVD to the public for free. That's right, it's free. We hope that after the tutorial you're about to watch, you'll be further along with your knowledge on trading stocks and maybe even a fatter bank account. For the complete DVD, you can order it by clicking on the Knowledge Center button that's on top of every TradersNation.com webpage. Stick around after this tutorial again for more information on ProOnline Trader DVD. In the meantime, watch, listen, and learn.
Now, how about this? What do you first see when you see a candle like this? Obviously, there's something major going on here. This definitely tells you that something got out of whack for this day. This is known as a doji candle. Dojis are very powerful signals depending on where they occur within the larger trend of the overall chart. As you can see, comparing what it looks like to most other candles, it has no real body. It's just a stick or vertical shadow line with a small horizontal line located somewhere on the shadow. The location of that horizontal line, which as you know now represents the opening and closing prices, can say a ton of things about the momentum in that stock for that day. Let's break down this day's events by just looking at this doji. Here on November 13, 2002, this stock Gilead opened at 35.70. Then for some reason fell off the cliff and went as low as 34.77. But yet by the end of the day it came clawing back all the way up to close at 35.70, its exact opening price. Also in this case, the opening price and closing prices are just about at the highs of the day. Now what does that tell you? Remember to always think in terms of supply and demand and sellers battling with buyers. On this day, the sellers came out to play in force and basically dumped a ton of stock at a time when the buyers were out to lunch. While they were selling, there wasn't enough buyers out there to take in all the stock, and thus the stock went down dramatically. But then, when the sellers ran out of stock to sell, someone wanted the stock bad enough to just simply buy it back up without regard to the price. If they were patient enough, they could have probably gotten the stock they wanted cheaper because the momentum was down, but something made them want it bad enough to buy it all that day, thus completely reversing the downside momentum. Instead, being that the close was not only equal to the opening but also dramatically higher than the low of the day, it left the stock with a major upside momentum that many people I'm sure took notice of. How do I know that? Well, look at the chart. The closing price for that doji was 35.70.
Thanks for taking the time to watch, and hopefully you have learned something from our free ProOnline Trader DVD tutorial series. For the complete DVD, you can order it by clicking on the Knowledge Center button that's located on the top of every TradersNation.com webpage. Put knowledge on your side. Doing that could fatten your trading account, that's for sure. ProOnline Trader DVD, get it today.